All right, welcome back, traders. Today I've got a simple video about a trade that I did not take, and I've been kind of watching what's happened since I haven't taken it. But I kind of want to go through this with you guys on why we use the RSI and multiple tests in a zone to determine whether or not we should take the trade and if the odds are on our side. So what I have up here are the Australian Dollar Futures, and you can see that we're in a nice little uptrend basically since the market puked on August 5th, and we've had a nice rally since that stalled here on August 29th, and we've started to fade back. On the 4-hour, the very first thing that I look for a trend reversal is a lower low put in place, which happened right here with it being below 40 on the RSI. That is the very first sign that we could be reversing trend. After that, we failed to make a newer high. So I'll write those out. So when a trend is changing, we look for a lower low that goes less than 40 on RSI. Number 2 is we have that lower high. And number 3 is a new low. So on the 4-hour, we had that happen. We had a lower low put in place that fell beneath 40 on the RSI. Then that lower high was put in place, and then we made a new low. So on the 4-hour trend time frame, I knew that I was okay to look for 1-hour levels to short using the trading time frame. So I've got my 4-hour demands down here marked out just as references, and I couldn't take this long because of my rules suggesting that the odds are not on our side because we're below 40, so I didn't take that long. But when I was looking for shorts, I did not take this on Tuesday, but I was looking at price yesterday as we approached this at 10 a.m. So now that the trend has changed, I'm looking for potential shorting opportunities, and I found one here, but you can see that we've tested it 1 time, we've tested it 2 times, right? When we come back up to the test a 3rd time, we're above 60 on the RSI. And what that suggests is we are not going to be able to make a new low without a stalling in price. So we had a couple things going for us here on this particular trade. Going for us, 1, the trend. Number 2, high quality level. And number 3, the approach was good. That's the kind of approach we want to see into our levels. And number 4 was we had an 8 and 89 trade. So we've had those things going for us. But going against us, we had multiple tests. Number 2 was RSI above 60. And the combination of the multiple tests and RSI above 60 led me not to take this trade. And the reason why I'm not taking this trade is because when I trade, I'm anticipating new lows to catch bigger moves. And there would have been nothing wrong with taking this if you were looking for just, a couple ticks here or there. But I like to trade where I'm anticipating new lows. And when we come into a level above 60 with multiple tests, it suggests that we're either going to run through the level or we're going to struggle to make new lows. And that's exactly what's happening here. We were unable to get below this area here of 6405 without it stalling. And now price is kind of going sideways here, and I don't really have any directional trading that I want to put on because of this. So one of the reasons, again, why we use RSI and multiple tests as odds enhancers for our trade. And this was just something that came up yesterday that I thought was pretty indicative of why I trade the way I do and why I have the rules the way I do. And this was a great example of why I wouldn't take the trade and why we're not making new lows. So let me know if you guys have any questions. Hope you enjoyed this video. As always, check us out on Facebook, YouTube, and everywhere else. All right, guys, take it easy.